What's good, y'all? It's HB Punch and Profit. We're going to break down price action in the NASDAQ today, January 29th, 2025. I mean, it's right there. I give you the date so you can see it in the charts. The setups are right there. You can go along with me and see it for yourself. So check out the setups that I'm showing you and check out the live executions for proof. Okay, if you want to see the live execution I took today, it will be in the link in the description below, or it may be on a video card uploaded to this particular video. Now, usually I don't like trading red folder news days, especially in the afternoon, but I couldn't help myself at the opening. There was a great setup. It was very low resistant. It moved fast, and I was able to get in, get out, and make a profit. There were some good opportunities, but you know, the reason why I say avoid red folder news days like this is because there's also a lot of false flags. And if you don't know how to deal with this type of seek and destroy or choppy range, you're going to get screwed up, man. You're going to blow out accounts. You're going to take a lot of L's. But if you're experienced, right, and you know how to deal with this, there are some phenomenal setups. Uh, Now, I know how to get great entries off of these ranges and tighter stop losses and big risk to rewards, but I'm not going to share that until we get more subscribers. We need 1,000 subscribers. I need to monetize this channel. I worked very hard to perfect my model, okay? And I'm not just going to hand that out for free, right? It is my baby. I went through the heartache and pain of losing trades and blowing accounts and doing the back testing to get it right. And if you're good at something, you never do it for free, as the old saying goes. Yes, I'm heavily influenced by ICT concepts and the inversion breaker model, but at the end of the day, I trade it in my own unique way. Okay, so if I'm going to throw that out to the world, okay, to have, we need to get this channel up to 1,000 subscribers. But anyhow, let's get into it. Go over the first setup. And like I said, if you want to see this, the link will be in the description below. The live execution, we get this inversion. Oh, but before we do, let me take that off. Higher time frame, I get to the charts at 9 a.m. I'm looking at the daily 4 hour, 1 hour. I'm not going to let that fluster me or confuse me. I'm just trying to see, do we have more bearish order flow or bullish order flow on the higher time frame? For me, it was predominantly bearish, but because it's a red folder news day, there were obviously going to be some buying opportunities depending on how you framed those trades. Okay, depending on how you framed them, but predominantly looking for sells. So we get our inversion right here. Okay, as you can see, bullish fair value gap, bearish fair value gap, or some people call it balanced price range. Doesn't really matter as long as you know what it does. Okay, you get your advanced market structure shift down here. Now you could have played this fractal low, but I wanted to wait for this third candle to print, okay, before and take out another this low right here before I took anything. We get the candle body close below it. Okay, and for me, I placed a buy, or I'm sorry, a sell stop at the advanced market structure shift. Trading the opening is very tricky. I wouldn't recommend it unless you're experienced. I like to put buy and sell stops in these scenarios, but you have to be very careful because you could get tapped in and then it fake you out and then go back to the upside like it did yesterday. But you have to know your higher time frame to win these trades. You have to know your higher time frame, and you cannot over leverage. One of the reasons I pulled my stop to $200 for this trade and had tighter risk is because if I did get faked out, I would manage my capital and manage my risk very carefully, and it would have been all right. I would have recovered and we would have moved on. But if I'm going to keep my stop all the way up here at the swing high and I'm over leveraged and then I possibly get faked out, it's going to be devastating. So let's frame the trade real quick. Now, preliminary, you keep your stop at the swing high. I put a sell stop down here because the 9:30 opening, things move fast and you tend to not get retracements into your limit order, right? And that's why I say you have to be a little bit more advanced, placing sell and buy stops. Uh, Preliminary been swing low, and even if I kept my stop at the swing, or I'm sorry, the swing high like I did, This is about like a 200 move point move down. Now, I didn't get all that. I got in, got out, but for future reference, I'm going to have to learn how to keep runners off of the opening trade. 225 points, 6 to 9, about a 7 to 1 risk to reward. And I kept my stop tighter than that. I kept it at 200 points, right? So that was probably 10 points with one mini. 200 points. Look at this risk to reward, 22 to 5. Okay, my take profit was roughly around here, so it was like a 6 to 8, something like that. So great first trade right off of the opening. And remember, we're going to be looking for inversions, which will be marked out with the orange box, and our advanced market structure shift marked out with the blue line. Stop loss at the swing lows and the highs, or at your discretion. Take profits 1 to 1 or more, or at your discretion. So we get down here, and this is where red folder news kind of hurts a lot of people. Yes, we're bearish, we're pushing down, but we're kind of, it's not, it's kind of chopping, right? It's kind of like seek and destroy type price action. It's going down, but it's doing it in a very rude way, very high resistance. Okay, so when you find yourself in a range like that and you're getting signals, like I said, I have a method to have the best entries and stop losses, but I'm not going to hand out for free. We got to build this channel. So we'll skip over all those moves and we'll look for the next move. So because we're predominantly bearish, we get that move roughly around here. It's not an easy one to see, lots of volume imbalances in here, but you get this inversion, you get this advanced market structure shift, and little to no drawdown. Beautiful trade. If you look closely, you have this bullish fair value gap, volume imbalances. Make sure you take that in consideration. You get the bearish fair value gap overlap and volume imbalance, right? And roughly speaking, this is where the inversion occurs. Okay, you swept a high right here. You get the advanced market structure shift right here. Candle body close. If you had a limit order, you get tapped back in. Very beautiful. Little to no drawdown. Short position. Even if I kept my stop at the swing high, okay, I get a nice, okay, potential 3 to 6. So definitely would have pulled off a 2 to 1. And one of the things I always say is that you don't have to keep your stop there. You can keep it just above the inversion, just below it. Okay, and guess what? Even if you kept it just below it, you would have been just fine. You didn't get wicked into, okay, until we had this pullback right here. But if you kept it above, just above, you'd have been fine with that. But like I said, if you're first starting off, put a micro or two on, put your stop up there. Just get used to getting the repetition of seeing the trade execution. Okay, but in this case, let's say you kept it somewhere where the inversion was. Look at the risk to reward. Beautiful. Even if I kept it just above, still beautiful risk to reward. So that was the second trade. Now you get this signal to the upside. You get an inversion. You do get an advanced market structure shift. Let's line that up to the upside. Now, because we're dealing lots of inversions occurring within this leg right here, right? But we'll just use we'll just throw this anywhere. It doesn't really matter. Okay. Now, because it's red folder news day, you're getting these nasty pullbacks. Okay, you're getting these nasty pullbacks, and you cannot sit through, 100-point drawdown. Now, maybe if you have one micro, you can survive it, and you're down like $200. You're holding on. You're about $200 down, and maybe you wait for it, but you don't have to do that. Now, I know how to trade this to where I don't have to take that much drawdown, but we're not going to get into that just yet. Okay. Here, you get another one. Inversion. Key time period. Okay. That's another thing. A lot of false signals, if you're not careful, will take place during time. If you're not trading during the key time periods, you're going to get a lot of false signals. Key time period here and there. Usually, I don't trade this late in the day. The strategy becomes a little bit less reliable for me in the day. Not that it's not, but I don't like trading past 12 or roughly 12, 12:10. Okay, but you do get a signal roughly around here during a key time period inversion, advanced market structure shift, and let's frame that trade and see how well it went. Little to no drawdown. Stop at the swing low right here. And let's see how far it went up. Now it's pushing back up. So far it offered you at least a 1-to-1. It may push higher for a 2-to-1, but right now at the very least a 1-to-1. Now, like I said, you don't have to put your stop all the way down here. You can put it just below the inversion, just above. Maybe you decide I'm just going to keep a very tight stop. I'm not going to risk anything more than $200 or $300, right? Something like that. Now look at the risk to reward. It's ridiculous. Okay, then you get this big pushback. Now, if you kept your swing low down here, you were stopped out, but I don't know why you wouldn't be taking profit off the board somewhere around here. That's 131 points before it decides to pull back. So figure it out. And if you want to learn more on how to do this, then like I said, keep commenting, liking the video, and subscribing, and I'll show you an optimal way to keep very tight stop losses and get in, get out on that first big run, right? Because that offered you about 100 points off of the first move up. If you don't know how to take profit from any of that move, I don't know what to tell you. You didn't have to sit and wait for this pullback. This was available to you. You just got to know how to frame it, okay? So plenty of setups, and I'm sure there was some setups to the downside. You probably had some moves to the downside, but this is red folder news. And if you don't know how to frame the trade, stay out, because this is what will happen. Look at this move. Boom. 150 points. It's not even so much the 200 points about. It's not even so much that the signals don't work, you guys. It's just you have to understand how to frame the trades, how to get in, how to get out. And if you want that exclusive content, we just got to keep building this channel so I can show you guys how to get those crazy entries. Or you can figure it out on your own and experiment based off of the fundamentals I have given you. But this is HB Punch and Profit. Comment down below, like the video, subscribe if you're new. And last thing, look, always try to trade and be done within 2 hours. You can find what you need within the first 2-3 hours of trading. I don't like dealing with the back end. You had red folder news at roughly 2 o'clock or whatever. Now look at all this chop. So keep that in mind. Try to get in and out of the market. Sometimes less is more. It's HB Punch and Profit. Peace.